journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I want to do gold, but before I do that, I want to go back to this S&P for just a second. Someone asked me a question. All I did, folks, I was tape reading. This is just right out of the book of, oh my God, Reminiscence of a Stock Operator about Edwin Lefevre, about Jesse Livermore. There were buy stops had to be here at 94.99. Okay, it went up to 05. I didn't sell it at 05. I sold it at 01 on the way down because there was no buying up there. Took out all those stops over the last several weeks, and there should have been something there. That's all I said. How much do I have to risk there? I said 10 cents. Yes, I got a chance, 10 cents. So that's why I did that. Let's go back to the gold. Yesterday in the gold, we were making that beautiful three drive to a bottom down there at 327. We said we were going to have a rally, get ready for the 382. We went up to it, went above it by about $10. Then we broke down, and you can see we went all the way down here. That made a $50 profit on that particular trade. Okay, now I was doing, as I was watching it, I was watching the AI run this morning, and as you can see, it followed just about as perfect as you can get. There was your low buying up and in here, and now we should get ready to start going down. Now you notice when I wrote on here, I said, do not do this trade. And the reason I said for that is because it's got a chance to go a little bit higher in here before it roll over. And if you remember, the last part of the day is the least most important part of the day for the AI. So that's why I said don't do that trade. So I'm just giving you a little bit of heads up. There is a trade that you might want to consider. It's losing money right now, but I like this trade a lot. This is the Treasury. Where do I turn in my chart pencil? This is the soybean meal. We've been waiting for that. The number was 2967. It's trading at 2961, so it's out $60. Your stop has got to be down below here, so you've got to risk about $400. But this is it's actually a perfect Gartley as we look at it. We're going to go through this together right now. Stan Harley will be our guest. First of all, we're going to draw it with the chart pencil just to see where we are with the ABCD. There's your AB, and there's your CD that comes in to right there. Okay, that's lined up pretty good. Now we can see we're down here 7 days in a row, and we're still going lower. We just made a new low just now. All right, now there's a possibility we could get here, or even here. Maybe it won't even work. But this is why we took the trade right there, because you got to go with the number 96 right now. It has a $70 loss in it. So let's just walk through this to see where we are. Okay, now we had the high up here, then we came down and made the 382 retracement. Now what I'm going to do here, you see you made a retracement here, then you came down, and then you had the big rally. So this is the one that you have to count. Well, that's what technical analysis says you should do. So you go from your high down to that spike low, and you'll see it goes to a little above the 382, but that tells us where this next ABCD should be coming in. All right, now I didn't do this on this because all I did was this number here. I felt so strongly about that. If we take the high to this level here, to the low, that level here, you can see we're going to come down here. We're going to have to sit with another $100 worth of heat, it looks like, because it looks like we're going to be going down to this level right here. Right now, we're out $50. So we got a chance here to lose another 100, but that's neither here nor there because I don't know when it's going to change. I'll check something in just a minute. But here is, if we look at this on a smaller time frame, you said this little tiny move right here. This could also be part of an ABCD, but this is not much of a, see that there's no rally here, folks. That's $1. You can't count that. So the only thing we got going for us is the fact that ABCD should come in at the very worst at 295. 295, we're trading at 296. Let's look at it one other way, and that's on the daily here. There's the daily. You're looking at basically the same thing without the swings, and you'll see that's the same number coming in here at 296 and change. Yeah, there it is right there. So right now it's out $50. Okay, now let's move on to a couple other things that we want to cover here. First of all, we've covered the gold market. I think that's what we wanted to do. Now let's go over and look at the NASDAQ, because that's the one that's bringing in all the buying. Now you can see the NASDAQ has taken out the highs way back here. See, way back on April 14th. That was only 7 days. Look at that move we had on that down move, folks. It was nice being short during that, but boy, when it turns, it really turns. Now let's just look at it on an hourly chart to see how far back those resistance numbers go. And as you can see here, we have one way back here. Now we've taken that out in the S&P. We have not taken it out in the NASDAQ as of yet. That's just a little bit higher than where it is. That's back up in here. There's the 382 from last night. And remember, folks, this took almost it took almost 18 hours to make that low, where we took out the low of the morning, and then we've had the rally this morning. The key this morning is when it went blast. I said this in the videotape, that if we go blasting through that 382, we're probably going to go up, because it stopped right where it should have. So that's another one that we're looking at. Now let's take a look at crude oil. Let's do Treasury bonds first. This is the one I'm the most bearish on of everything. This is Treasury bonds. This is what I missed yesterday. We're going to be what we call reinforced here again. But I was looking for the market to get to here, 116.10. But if you did the weekly, which middle of the week, I never do a weekly, but there it is. There's your weekly number. Came right up in here. You're at 02 right now. If you get a chance to sell this thing again at 115.21, I would certainly do it. If we look at it from today's action, you'll see we had a pretty big break from that level. You see we came down 2 full handles, and now we're coming back a little bit to that same level. We'll just draw this in to see where you are. And this is well, it went exactly to the 61% retracement right there. So all the bonds are doing now is because when the bonds go up now, it's because the stock market's there. There's no fear of a flight for quality, but there is no flight to quality in bonds, folks. The proof is right there. The proof is right there. The biggest down move we've had in bonds since, well, in 1 week, it's the biggest ever. But you can see we accomplished 8 weeks. We did it in 1 week. This is really bearish, folks. Might change overnight like everything else, but boy, right now you have to say this is what you have to do. So that's what I'm paying attention to. We should take a look here at the Treasury notes. I don't look at those very often, and we'll bring these up right now. Let's look at the weekly first to see if we see the same type of 382 that we saw in the bonds. This will be news to me too, folks. Okay, there it is right there. Move this over like this. And okay, there's the bond move down right there. And all we're going to do now is we're going to see what the 382 retracement was in the notes. And there it was. There it was on Friday. Here is Monday. So wait, what day? Today's Thursday. Are you kidding me? Let's do the daily. Oh, my God. All right, let me reconnect this here. Refresh. All right, we'll be right back, folks. Don't forget Stan Harley at the break. We'll cover this when we get back just to be safe.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, Larry Pesavento back for TFNN. This is the Treasury notes. You can see they've been at the 382, 1, 2, 3, 4, 5 out of the last 6 days. They're still here. This is still bearish. This means this is a weekly 382. By the way, if on that S&P trade, I know it's selling off a little bit, but folks, now you're putting a stop at break even on the S&P. That would be at 55.01. It's already got 15 cents profit in it, so if it gets 20 cents, I'll probably move it down even a little bit lower. Anyway, that's what we're watching here with this. Okay, now we'll move over here, get this out of the way. I can take this off the board because I don't watch notes that often. They don't trade. Well, they trade well, but they don't have the same volatility that bonds do, so that's why everyone trades the bonds. So that's what we're watching right here. Here is that. Remember I said not to do that trade in the gold. The reason for that is it's going to make that higher level. I'll just get this out of the way. It's going to make it the higher level right here on this move right there. That's exactly what it's going to be doing. Now I sold it at 44. Hold on a second, and we'll move it right here, put it up right there. So it's going to be coming into this level here right about 51. Okay, now I sold it at 44, so right now I have a $5 loss in it. All I'm going to do now is I'm going to come over here, put it on a shorter time frame, and see where I am, because this is the good part of this is that, we had a tremendous move down from this level here, which made $4,000. Now I'm giving some of the money back. Now I sold it at 44 based on what I thought it was going to turn, but it's not. So I have to put a stop in. The first thing I'm going to do is I'm going to go from the high over here to the low over here. And you can see that if we get to this level right here, which I'm already out $4. So I have to put a stop in. So if I sold it at 44, I've got to put my stop up here above this level here, which is 54. Now that means I'm giving back 1,000 of the 4,000 that I made, but I'm willing to take that risk because I know what my risk is. So my stop will be at 33. Make it 3346. Okay. Now on a really short-term basis, really short-term, here's where we are. This is just, remember, from going back a couple hours ago, we had this move coming in right here and that move coming in right about there. So now I'm almost at that ABCD. So I have my choice of either bringing my stop down to like 53 and only risking 900, or going above this can risk 1,100. Well, I've had a good day on the downside, correct? So what I'm going to do is I'm going to leave the stop here at 33544 and see if the trading gods will be good to me. Sometimes she is, sometimes she isn't. The day's hour bars up, 1, 2, 3, 4, 5. 1, 2, 3, 4. We'll be in the 5th bar pretty soon. So all I'm going to do now is to put the limit minder in, and we're going to be hit there in just a second. The fact is, it'll be hit just as I put it in. We just made that correction right here. Now folks, that is a definition of sloppy trading. It really is. What I did was, you learn from this stuff, so let's hang in. See, I realized something was not right here, but yet I did this level right here because I assumed that it was not going to get any higher here. My assumption's wrong. See, so I made a mistake here, so I'm trying to correct that mistake by using a correct stop, and that's what I'm watching. So now the good part about this is I don't have to look at it anymore. So I turn it off and worry about that when Stan comes on. Let's take a look here at the euro. The euro has been going lower as we expected. We'll come over here and we'll draw that in. Let's look at it from the daily because you'll see why we were expecting that. There was the big ABCD up into this level right here. We've come down now couple hundred points, which is good. So we'll go down to a smaller time frame, and you'll see it's come down hard. Yesterday we had a 50% retracement. Let's just look at it today. You're going to see that you had a pretty much exactly 50% retracement today too. Oh, this one was 618. Oh, that made that a Gartley. I'll be darned. Let's draw that in so everybody can see it. And there's where we are right there. And by the way, that phone number that I asked about the other day, the gentleman that called me that was kind enough to send that lovely letter, he contacted me today, and he's going to resend me a copy of the letter. And when it comes back, I'll read it on the air. It was one of the best letters I ever got in all these years of doing this for people. As you can see here, this is certainly moving lower all day long. So you've had something working for you here. It's been trading below the opening all day here in the Europe, which is pretty good. Great thing to trade, folks, because it doesn't have that wild volatility in the S&P and some of these bonds, S&P and gold. It really trades well. It's real money. It's the most heavily traded thing in the world, and that's why it's so very important. So someone asked me a question. What do I do if if the soybean meal doesn't work, I'll go outside and cry. Nothing. I'll just get ready for the next trade. Let's take a look at soybeans themselves. This will be fun to look at. Hold on. We got a few minutes before Stan comes on. Let's take a look at soybean oil. Now, that's been much stronger than the meal usually. Let's see. Well, it's actually bouncing up a little bit. See? So meal, the soybean, this a weekly. Shut the front door. Get the daily up so everybody can see how strong it really is. There it is right there. We're moving up in oil, down in meal. That's because of spread. They want oil. They want the paint. They want the cooking oil. They don't want the cattle feed and stuff like that that's involved with soybean meal. So now let's look at the soybeans. We've got just a second here to do this. We're going to do it two different ways. First of all, there's S right here. One more up. Okay, now this is the current. I think we're in July beans now. Yep, here's our July bean chart. Now, this is really unusual, folks, because you can see here, this is an early morning. Look at July beans have been going up all day, okay? Soybean meal has been going down all day, and soybean oil has been going up. The crushers, the people that crush the beans, when you crush the soybean, it yields 80% meal and 20% oil and, well, odds and ends of confetti that they feed the hogs. But that's what it's doing. Now, let's just look at this from a standpoint of if the neural net picked anything up. Well, see, there was your low coming in here on this. Now, you would think that the meal would have gone up with this, but it didn't. That's because of the crush. And that crush can change tomorrow or today in just a few minutes. Might stay that way for a week. If it does, I'll be a loser. But that's what we're looking at here with this. Now, this is a pretty good move. This is a $10 move here in the soybeans today. So that's $500 up as opposed to being $100 down in the meal. So that's it. We've got Stan Harley coming up next. Hold on one second, folks. We'll get this. This is the crude oil. Remember, we had a very bearish up in here. I really thought we had a chance to come down here and make this ABCD, but we didn't. We've just had lower highs. We went right up to the 61% retracement today and then back down again. Now, this is setting up. This is my opinion, of course. It's setting up. Now we have 3 higher tops. Try that again, Larry. 3 lower tops. That's highly suggestive, okay, that this could be a downtrend. And if it is, it'll give you double places to look for a potential long. You'll have a beautiful pattern right down here. All right, that's it. Well, it's going to be lower than that because this didn't draw this right, as you can see. And then you're going to have the other one that's going to be right here, because this is a 1-3-5 pattern that we had today. 1, 3, and 5. We're coming down to 60, folks. My opinion. Let's stay tuned for the man himself, Stan Harley, 877-927-6648.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Folks, we have Stan Harley in the house today. Stan, you're looking good today, my friend.
Hello, Larry. I'm doing just awesome. Thank you. I keep seeing that picture on the screen of you, and darn, I wish I was that good looking. Oh, you are a handsome man.
Unfortunately, God blessed me with so many attributes, Stan. I'm a fact that you are a dubious person of the truth, so I have to turn off this limit minder that I've got going on here now, so hold on. Oh, that was the gold going off. Go ahead, please continue the show, my friend, because we've been waiting for you for a couple weeks here. So we've had a little bit of volatility, Stan. What are you reading in all this?
Well, Larry, I think in kind of keeping with my theme, it's my view that we have seen an important market high. And then from this point, we're going to kind of stair-step our way lower. So I'm sort of titling this talk today with you on the air is what's going to happen with post-market top. Let's start by looking at the monthly data, then we'll look at the weekly, and then we'll look at the daily. We'll work our way down.
Okay.
From a monthly perspective, I've looked at a pattern going back, the last 76 years. 76 is a Lucas number, of course, and you know my fondness for all things Fibonacci and Lucas. Yep. Lucas numbers more often than not tend to define moves on the time axis, i.e. on the x-axis. And Fibonacci numbers and their multiples tend to more often than not define moves from high to low or low to high. That's not 100%, but that's probably 90% in my experience. So let's look at the monthly chart going back many, many years. And what I've done here is I have marked the major lows on the chart. And interestingly, beginning with the low that occurred in June of 1949, and I mark this as the genesis point of this cycle. Cycles, by the way, have a beginning point and they have a terminal point. I call the beginning point the genesis point. To the left of this point, the cycle did not exist. It just suddenly went poof in the thin air and began. But just take a look at this. We had a low in June of 62, big low in October, December 74, crash low of 87, and so on. As it turns out, those lows are separated by a rhythm that spans 152 months. And 152 happens to be good old Lucas number 76 multiplied by 2. And what I've done here is I've put all of the lows. You can see right here, the ideal low was right in this time frame where I've got it marked, but it actually contracted a bit to here or to here. Either one of those works out as a neat Fibonacci ratio of the cycle. I put all of those dates in a spreadsheet, and it computes the cycle length at exactly 152 months. Oh my gosh, look at this R squared, 9999. It's almost 1. 1.00 would be a perfect fit to the data. All the data points would fall right on the line. Well, that is amazing. Amazing. And the standard deviation is a mere 1.86 months over 76 years. And it says, look for the next low in this rhythm, ideally in August 2025. Standard deviation is about 2 months. So what is the takeaway here? Well, this 152-month cycle is highly suggestive, assuming no inordinate expansion, which could happen, but assuming no inordinate expansion of the cycle beyond 1 or 2 standard deviations, we should be looking for a significant low, August 2025, well, let's say plus or minus about 2 months. And here we are, April of 2025. And, this Lucas number 76 just doesn't apply on the monthly data. It also applies on the yearly data. Look, because if you add 76 years to 1949, you get 2025. Interesting.
Wow.
Let's shorten the time span down to just the last 50 years. And what I have found here is all of the dominant lows since 1974. And again, we're looking at the S&P, not the Dow. Previously, we looked at the Dow chart, which bottomed in December of 74, and that projected all of the major highs, including the December 4th high that occurred in last year in the Dow Jones Industrials. Well, now I'm looking at the pattern of lows, and lows can better be defined by the S&P low in October of 74. And Here I've marked the lows of August of 82, the crash low of 87, and so on. You can see them. And just to the eyeball, they look pretty regular. Well, when I put them in the spreadsheet, it turns out there's a cycle length of 82 months defining this low-to-low pattern. The half span of this is the 41-month cycle, which Edward R. Dewey found back in the 1940s, wrote about it, talked about it a lot. It turns out it's a very, very dominant cycle as well, and I've shown that one on the air here on TFNN with you numerous times. That's the half span of this cycle, but the more dominant component of that cycle is actually 82 months, as you can see, and look how well it's defined all of the lows. The next low in the series is due ideally in May of 2029, plus or minus about 6 to 7 months. And I think what's going to happen is we're going to get a low later this year. You add 47 Lucas months to that low, and you're going to get this low. And this low is going to be the more dominant low, I believe.
Wow. Okay.
And until the music goes, we'll keep on rolling here.
Yep, it'll be coming soon, but don't worry about it.
All right, just cut me off fast. Looking at the weekly data, here's a rhythm that I have found, and this is my cycle template overlay, and look how well this lines up with most of the lows on the chart. In fact, it works out to be about 66 weeks. And going back to the low in December of 2018, March of 2020, here the cycle expanded a little bit to produce this high. It came in right on the button, October 2022. It contracted a little bit by 0.618 Fibonacci. And then the next low occurred, whammo jammo, April 7th, 2025, just a couple of weeks ago. Look how regular that rhythm is.
Yeah, it sure is. Wow.
Curiously, you know, the financial media on TFNN's competitors, people don't talk about these things, or they just don't see them. I don't know. They prefer to talk about tariffs and things like that, but
yeah, well, they can't talk about numbers because they don't know what they're looking at. They can talk about tariffs because they don't know what that is. So.
And I'm not going to get into anything.
We've done something wrong now. Here comes the music. We'll be right back, folks, with Stan Harley, the Harley Stock Market Letter.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back with Stan Harley, the Harley Stock Market Letter. Please continue, Stan.
Yeah, Larry. It's curious. The financial media focuses on tariffs and everything related there too. But given my views of the world as a technical analyst, as a data scientist, it would not have mattered who was in the White House or who was on Capitol Hill. These things were preordained. They were going to happen based on cycles and technical analysis.
Yeah.
That's my view.
Mine too, my friend. I agree with you. It doesn't make any difference who's there.
It doesn't matter, yes. We've looked at the monthly data. I'm looking for a pair of twin bottoms over the next several years, one later this year, which I think will be a standout low, and then a more important bottom approximately 47 Lucas months later, call it 4 years, in late 2029. We got lots of time to worry about that. But in the short term, let's take a look at the daily picture and see what's going on here. This is a daily chart of the S&P that I ran off just a few minutes ago, about a half hour ago. And I've overlaid this. It might be tough for the viewers to see, but I've put my Fibonacci grid on here, and I have aligned the 0 point of the grid with the low that occurred on January the 13th, and then drawn some other lines aligning with the high on February the 19th, the low on March 13th, the low on April the 7th, and then a low or a change in trend yet to come. These turning points line up with these Fibonacci ratios: 0, 0.309, 0.61, or no, not 618, 691, and 1.00. And then you take note of the high that occurred back on February the 19th, the all-time high in the S&P, and you add Fibonacci 34 trading days. Remember, Fibonacci numbers work from high to low or low to high. That aligned with the April 7th low within one trading day.
Wow.
Okay, that's nice. What's going on from this point forward? Well, I believe we made an important low on April the 7th. That's basically an intermediate bottom. It occurred 168, call it 170 trading days from the August 5th low. I didn't put together a chart on what I'm saying right now, but that was about 34 weeks prior. The dominant intermediate cycle in the stock market is about 34 weeks or 170 trading days, plus or minus. And the April 7th low occurred 168 trading days from the August 2024 low. So that is, as we used to say, close enough for government work. Okay, where are we going? I believe we are in a counter trend rally, and I believe you said pretty much the same thing just before you and I went on the air. I completely agree with you on this. How high and for how long are we going? Well, I may have an answer. Generally speaking, moves from high to high or low to low tend to be a function of the Lucas number series. So if we were to go 58 trading days, which is Lucas 29 times 2, that would align with this 1.00 ratio that I've shown at the bottom. And that happens to align with May the 13th. So just a couple of weeks from right now, 2.5 weeks from right now. So what's my takeaway here? I believe we're in a counter trend rally right now, and we're probably going to chug a lug our way higher into the middle of May, peaking out somewhere around the 13th, plus or minus, and stall out, chop, 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 and then start heading south again. That's what I think. What the fundamental news of the day will be: tariffs, Russia, Ukraine. Gosh, I have no idea. I don't know.
Nobody else does either, my friend. No one else does either.
No, I tune in and listen to you because you have the answer.
Yeah. I'm the person that doesn't even listen to the news. I mean, I really don't. I've trained myself not to listen to it because I had a real difficult time with that when I was in Europe, because these people had Bloomberg splashing around. They had Squawk Box going for CNBC. They had the European version of FNN on, and they were all listening to all the fundamentals and writing down numbers, and I'm saying to myself, what am I doing here, buckaroo? And the guy said, how do you do this? I said, it's right there on the chart. You don't have to listen to anything, but that's a different story for a different topic. You and I we fought that battle for so many times, Stan, and they'll be fighting it long after we're gone. That much I'm sure of. It's not about how much money you make, it's how much money you don't lose. That's the bottom line.
Yeah, I like that. That's good.
Yeah.
And then I'm a quote from W.D. Gann that was true when he wrote it, just as it is today. He says, and this is a very important part, the man who refuses to change his mind will soon have no change to mind.
That's good. I thought I'd read all of those, but I must have missed that one. That is a good one. The market can stay against you longer than you have money. That's for sure.
Yes, and I tell people what's the most important tool in my toolkit. It's on the back end of a pencil. It's called an eraser.
Yeah, making corrections all the time. That's for sure.
Yeah, you and I, we're data scientists. We look at patterns, we look at charts, we look at cycles. We take all of this in, combine that with our many years of experience, and we come to some working theory about where do we think the market's going. And you obviously have to have that if you're in the business of trading and speculating. That's absolutely necessary, and it has to be well thought out. It can't be a shoot from the hip.
Right.
At the same time, though, you need to be quick and ready to change your mind if things turn out differently. And they often do. And that's just the hallmark of being a great technician. You need to have a plan, yes, but you need to have the flexibility to change that plan in a heartbeat. If either new data comes in that might change your pre-existing theory, or maybe you just look at old data with a fresh set of eyes. And that happens to me all the time and probably happens with you.
Just occasionally, like 24 hours a day, every second of every day. It's really, it's really hard to explain to somebody that, that you're not listening to news, that you really don't do that. But I really don't. And when the Pope died, I wanted to see, I wanted the circumstances under his death and all that stuff. And then instead of worrying about the Pope dying, they're saying, well, this is going to be the first black Pope. Well, what idiot would be so, I better get off the soapbox now and be thought a fool than to stay on the soapbox and prove everybody that I'm a fool. So I'm going to shut up. It doesn't make any difference what color the Pope is, my opinion. Oh, God. I'm getting in trouble, Stan. Hey, listen, thanks for joining us, buddy. We'll have you on again soon, okay?
Look forward. My pleasure.
You bet. Stan Harley, folks, the Harley Stock Market Letter. Stay tuned. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the soybean meal. We bought that $296.70 just a few minutes ago. We had a profit of $296.80. This is going to be one of our trades for our live trading tomorrow. It goes from 6 until 9. Hope you can join me. Just contact Jacob, Jacob, at TFNN.com if you want to sign up. Usually have a lot of fun in here. We got go to the shorter term time frames, of course, to pick trades that we're looking for, but this will be one that we're watching. This has got just about everything you could ask for in a trade. It's a perfect Gartley. There's no head and shoulders pattern here because there's not really anything back in here to gauge it on. Certainly can't use this one. And anyway, and even if you could, it's slower, so it wouldn't be right. So there's no head and shoulders. It's just a perfect Gartley right here. Sometimes they win, sometimes they lose, but that's what we're watching. I want to thank Stan for coming on. He puts a lot of effort into the work that he does, and it is really quality work. He's one of the featured speakers for the Foundation for the Study of Cycles, having their big cycle program now, and along with Bill Meridian. And Bill Meridian's birthday, folks, is tomorrow. Make sure you send him a nice birthday card. And then tomorrow's guest after the live trading will be Norm Winsky of Astro Tens. He asked to come on because he said he's got some really special cycle stuff coming in. And folks, so far he's had some pretty good calls in here, and we want to listen to what Norm has to say. And that'll certainly be tomorrow when we're able to watch that. Also, do the best you can to try to help your neighbors, and because we all live on the same planet, we all got to stay here together. So let's try to be kind to one another and don't say anything bad about anybody, folks, no matter what their political things are. I mean, I look at this each day, and the reason why I don't watch the news is because of the political stuff. It just drives me nuts. Anyway, that's what I'm watching. But I haven't looked at that for years. Listen, live every day in an attitude of gratitude, and may God bless.